Starting from exercise 14.2, net present value analysis. Suppose that the management of Concale Company is considering the purchase of 27,000 machines that would reduce operating costs by 7,000 per year. At the end of the machine's 5-year useful life, it will have a zero salvage value. No salvage value is expected from the machine, and the company's required rate of return is 12%. Now, our decisions will depend on the 12% as a rate of return. Determine the net present value of the investment in the machine. What is the net present value of the machine? So I need to prepare a schedule or a table like this. So I will say the item, this is 14.2, okay? Item, year, cash outflows or inflows, factor depending on 12%, and the net present value of the present value. The item will be what? First, the cost of the machine. The cost of the machine, right? The cost of the machine, which is outflows for 27,000. What is the time for the payment of the machine? No, which means now, or one, right? Which means now, and the factor would be 1. So the net present value would be 27,000. Okay. Do we have any salvage value? No. Do we have any cash inflows? Cash inflows from the question. Read the question carefully. That would reduce the operating cost by 7,000. Reducing your expenses, which means cash inflows. So the reduction in costs, which means cash inflows. Okay. What is the time for the reduction?
5.
From 5 or 1 to 5? 1 to 5, right? 1 to 5. From year 1 to 5, I will reduce my cost by 7,000, is it? So the 7,000 will be positive. Why? Because I'm waiting to reduce, which means cash inflows, right? What is the factor? Comes from table 1 or 2? 2. Why? Because I'm talking about annuity. So the factor would be 3,605. 3,605. Okay. 3,605 multiplied by 7. This will equals to 25,235. 25,235. Do you have anything else for the question? No. So the net present value, will be the difference between these two numbers, which is 1,765, 1,765, and negative. Negative means net present value, and a negative means I will reject. Why? Because it will give me less than 12%. This is the meaning, right? Okay. Okay. So this is the answer of number 1. What is the difference in number 2? What is the difference of or between the total undiscounted cash inflows and the cash outflows over the entire life of the machine? Suppose that we do have no inflation, let's say. So what is the difference between the total amount and the cost of the machine? 35, yes, minus 27. So you will say the annual cash savings, which is 35, calculated from what? 7,000 multiplied by 5. As considering that we don't have a time value of money. So the 35 minus the investment, which is 27,000, and the difference will be 8,000. This is the net cash flows. Assume that we don't have any inflation or any time value of money, then the difference will be the total amount 35 minus the investment. Any question about that? Any question? Okay. The internal rate of return, which is objective number 3. Internal rate of return. The rate of return promised by the project over its useful life. It is computed by finding the discount rate that will cause the net present value of 0. So the general rule, if the internal rate of return is equal or greater than the minimum required rate of return, I will accept the project. Otherwise, I will reject. Suppose that we have this example. Dicker Company can purchase a new machine at a cost of 104,320 that will save 20,000 per year in cash operating costs. The machine is or has a 10-year life. So the internal rate of return can be calculated from the tables. Look, future cash flows are the same every year. And in this example, we can use or calculate the internal rate of return as follows. The present value of the internal rate of return, which equals to the investment required divided by the annual net cash inflows or flows, net cash flows. So 104,320 divided by 20,000. This equals to a number. The number is 5.216. Okay. The present value for the internal rate of return will be 5.216. And then I will go to find this number in the tables. This is the opposite for the present value, if you like. So I will go to the tables and I will find the 10 years, which is the life of the project. And I will find what is the percentage that comes this number under this title. So we can find that it is under 14%, and this is called the internal rate of return. So it is a mirror for the present value. We used to find the factor and then to use it in the present value. This is the opposite. So for find the 10 period row, move across until you find the 5.216 and look at the top, the rate will be 14%. So the decision will be if we have greater or equal to the 14, I will accept, otherwise I will reject. This is another example also. We can find the 3,605 and it comes under the 12%, and this will be the internal rate of return. Let's discuss something more interesting. The net present value for two projects. White Company has two alternatives. One, remodel an old car wash or remove the old car wash and install a new one. The company uses a discount rate of 10%. Suppose that we have two projects, the new car wash or the old car wash. The annual net cash inflows will be 60/45, which is the difference between revenues and costs, the annual net cash inflows. Now, if we install a new car wash, the cost will be 300,000 for 10 years. Salvage will be 7,000 after the 10 years. Replace brushes at the year 6 or the end of year 6 will be 50,000. And if we install the new car wash, which means I can sell the old one now, which is called the salvage of the old machine. If I install the new one, I can sell the old one now, not after 10 years, is it? So the salvage of the old equipment will be 40,000. Now let's prepare or calculate what is the net present value for each project. So installing the new wash car, initial investment will be 300,000 now, and now means 1, so 300,000 negative. Replace brushes in year 6, 50,000 multiplied by factor table 1, because I'm paying one time. 28,200. Annual net cash inflows from 1 to 10. I'm receiving these cash inflows. I'm receiving 10 times. Each year, I'm receiving 60 given in the question. Multiply by annuity factor equals 368,000 something. Salvage of the old equipment will be received now. So 1 multiplied by 40. Salvage of the new equipment will be received at the end of year 10. So after the 10 years, I will receive 7,000. The present value will be 2,702. So the net present value for the new machine or the new project will be 83,202. This is the present value of the new machine. Okay, if the company remodels the existing washer, which means I will keep my old machine and I will remodeling this machine. If we choose this option, then the cost of the remodeling will be 175,000, and we need to replace the brushes at the year end of year 6 for 80,000. So the present value of the old washer, which is the project to keep the old washer, will be what? The initial investment 175,000. Now the replace of the brushes in year 6, 80,000 multiplied by a factor from table 1, 45,120, and the annual net cash inflows from year 1 to 10, 45,000 given, so 276,525. Right? So the net present value will be what? 56,405. Look, that we don't have a salvage value for the old one, is it? We are remodeling, but the question says or give me that we don't have a salvage. We don't have a salvage value for remodeling. If we are remodeling the old one, then we don't have a salvage value for the old one. So the present value or net present value will be 56,405. So what is your decision to choose the first one, the new machine or the old machine? New machine or old machine? New machine, why? Because the net present value are higher. So if we do have a net present value both in positive, which means I will choose the higher net present value. So the favor or the difference in favor for the new washer will be the difference between the net present value for the two projects. Again, another example for a truck. For a truck, look. This information about trucks, old and new truck. Now, buying a new truck will have a net present value of 32,000 negative. But keeping the old truck will be a negative net present value 42. So what is the decision in this case? The first one, why? Both are negative. I will use the less, the smaller, right? If we do have a negative net present value, then I have to choose the less or the lesser, right? So the lesser or in favor in having the new truck will be better. I will skip the uncertain cash flows. Okay. Objective 4, maybe later. And I will go to 5. Ranking investment projects in order of preference. Ranking means give me the order of your projects. Suppose that we have 4 projects, then I have enough money to invest in more than one project. Then give me the ranking, the ranks for the project. Suppose that we are having more than one project or opportunity to invest in more one project. Attempt to rank acceptable alternatives from the most to least appealing. So the higher the internal rate of return, the rule, the higher the internal rate of return, the more desirable the project. Look at this example and remember that the net present value of one project cannot be directly compared to the net present value of another project unless the investments are equal. Look at this example. We need to invest in project A, investment required 10,000, but we need 5,000 only in project B. So we cannot compare the two projects because the initial costs are not equal for the two projects, okay? The net present value, suppose that we have the same net present value for the two projects, but the investment required is different. So we cannot use the net present value as a figure to compare between the two projects. Then we have to use something else called the profitability index. Profitability index. Profitability index is equal to what? Net present value of the project divided by the investment required, which is more accounting number, okay? Net present value divided by the investment required. For the first project, what is the profitability index? It is simply net present value 1,000 divided by the investment required. This is called profitability index 10%. Is that? For the second project, 1,000 divided by 5,000, which gives you 20% profitability, which means which is better? The 20% definitely. So I would say project B is higher in profitability index, then it will be better. The last thing, compute the simple rate of return of investment. Simple rate of return does not focus on cash flows, rather it focuses on accounting net income. The following formula is used to calculate the simple rate of return. Simple rate of return can be calculated from incremental. What is the incremental word means? Additional. Incremental means additional. So incremental net income or net operating income divided by investment or initial investment. Annual incremental net operating income divided by the initial investment. Suppose that we have a management of daily grid wants to install a espresso bar in its restaurant. The cost will be 140,000 for 10 years, will generate incremental revenues for 100,000 and incremental expenses for 65,000, including depreciation. What is the simple rate of return for investment in this project? What is the incremental net profit? Exactly. We have, guys, incremental revenues. So the additional revenues that I will have from this project, and we have the additional expenses that I will have from this project. So the difference will be what? The incremental net profit from the project. So simply, we can calculate the simple rate of return by the incremental net profit divided by the initial cost, which is 35,000 divided by 140,000. So this equals to 25%. 25%. Definitely we'll say that also the simple rate of return ignores the time value of money. Ignores the time value of money. And the same project may appear desirable, favorable in some years and unfavorable in other years. It depends on the year. The additional or the incremental net income for the years are different. Okay. When investment center managers are evaluating using the rate of or the return on investment ROI, the project's simple rate of return may motivate them to bypass investment opportunities that earn positive net present value. We do have more than one indicator for the performance. If you heard about these words, ROI means return on investments, ROA, return on assets, and the last one is ROE, which is return on equity. So these are accounting indicators for evaluating the company. Let's do another exercise then. for maybe the ranking. We did 14.1, 14.2. I will skip 14.4 because it is related to the objective number 4 also. Let's do this one, the preference ranking, which is 5. Okay, 5. Suppose 14.5 preference ranking information on 4 investment proposals is given below. We do have 4 proposals. Investment required 90, 100, 70, 120,000 respectively. Present value of cash inflows, 126, 138, 105, 160,000. Net present value 36, 38, 35, 40. And the life of the projects are different, 5, 7, 6, 6 respectively. Compute the profitability index for each investment project or proposal. What is the formula for the profitability index? Net present value divided by the investment required. Net present value divided by the investment required. So what is the profitability index for each investment? Again, we need the net present value divided by the investment required. So 14.5, we need to calculate the profitability index, which is the net present value divided by the investment required. This will give me the 90, the 36 for A, B, C, and D. According to the formula that we have, be careful that you will use the net present value, not the present value of the cash inflows. So the net present value is just 36,000 divided by 90, 38 divided by 100, 35 divided by 70, and 40 divided by 120. This will equals 2.33. The 36 divided by 90 will equals to 40, and 38 divided by 100 will be 38%. So this is the profitability index. So what is the ranking here? What is the ranking? I will choose the best project depending on the profitability index. Be careful that we use the net present value, not the present value of the cash inflows. So I will say project C will be number 1, right? Depending on these numbers. Project A, then project B, then project D. Depending on the profitability index, I would C, A, B, D. C, A, B, D, depending on these numbers. Okay. Let's do 14.7. Any question about this? Any question? Okay. Last exercise, 14.7. Net present value for 2 alternatives. Again, Spirit Industries has 100,000. Spirit Investments has 100,000. This is the amount that I have. The company is trying to decide between 2 alternatives, uses the funds. The alternatives are A or B. A or B. Cost of equipment required for project A is 100,000. We don't have a cost of equipment for project B, but we have a working capital investment required for B, 100,000, and we don't have a working capital for A. In both cases, these are outflows for the projects, is it? the cost of equipment or working capital at the beginning of the project, both are in outflows, right? Annual cash inflows 2116 respectively. Salvage value will be 8,000 and 0 respectively. The life of the project 6 years for both. Working capital for project B will be released come back at the end of year 6 or the 6 years for investment elsewhere. The company's discount rate is 14 for the tables. Compute the net present value of project A, the net present value of project B. Which investment alternative would you recommend for the company to accept? Any questions about this? Okay. The last one, or the exercise 14.7. 14.7. 14.7, we have to decide depending on the net present value, is it? So I will calculate the net present value for both, and then I will choose the higher if it is positive, lesser if it is negative. So let's do this exercise. We need a table. So the item 14.7, item year, is it? Amount or cash? Factor? Present value. Okay, the net present value will be the answer. The present value. For project A, I would say the cost of equipment, and the year is what? Now, amount is what? 100,000 negative. Factor is 1, and present value will be 100,000 negative. Okay, so 100,000s. The purchase, if we draw a table, it will be much better. The table contains what? The item, year, amount, factor, and the present value. The cost of the equipment for project A is 100,000. The year is now. The amount is 100,000 negative because it is outflow. The factor is 1 because we are paying now, and the present value is 100,000. Okay. No working capital is needed for project A. Annual cash inflows. Cash inflows from year 1 to what? Annual cash inflows 1 to 6, right? 1 to 6. And we are waiting 21,000 for 6 years, is it? For 6 years. So we need a factor from table 2. We need a factor from table 2, which is the conjunction between what? 14 and 6. 14 and 6. So the factor will be 3889. 3889. This factor comes from 14 and 6. Okay. So 3889, and the answer will be 81,669. 81,669. Positive or negative? Positive, because it is cash inflows, is it? And what else? We do have a salvage value. Salvage value in year 6 for 8,000. Factor from table 1. Table 1, why? Because I'm receiving it once. So 14 and 6, we do have a factor from table 1. This will be 456.456, and 8,000 multiplied by 456 will be 3648. 3648. The present value of the 8,000 today, is it? Do I have anything else for project A? No. So the net present value for project A will be the sum up for these numbers, 14,683. 14,683 negative, which is 100,000 negative minus 81 positive minus 3 positive. So we have 14,683 negative net present value. This was number one for project A. Number two, which is project B. Number two, the item will be what? The item for project B, we don't have a cost of equipment, is it? We don't have a cost. We have a working capital, is it? Working capital. So I will start to say the working capital needed for the company now, right? 100,000 negative, right? Negative, because I will pay for the project, multiply by 1, which is 100,000 negative. That what else? Annual cash inflows. Annual cash inflows from 1 to 6, 16,000 positive, the same factor 3889, and this answer will be what? 62,224. 62,224. Okay. And what else? We don't have a salvage value. We don't have a salvage value for project B, but we still have something. What is that? Do we have anything else here? Yes, we do have. The word working capital, look at the question again. The working capital needed for project B will be released at the end of the 6 years, which means what, guys? Which means what? I will receive the 100,000 again, right? So the working capital released, the working capital released means come back. What is the time or the year? 6, which means it will come back after year 6, right? And I'm waiting to receive 100,000 positive number. What is the factor here? 456, which is the 14 and 6, which is the same. 4, 5, 6. So 45,600 will be received after year 6. So the net present value for the project B will be 7,824 positive. So you choose the first or the second project? Second project, because definitely it is a positive net present value. So number 3, which investment invest in B, because it has a positive net present value. By the way, the answer for number 3 is accept, because a positive net present value. The key word here is a positive net present value compared to the other one, which is negative net present value. Suppose that we have 2 positives, then the keyword will be what? Higher. Suppose that we have a negative, the word will be the lesser, because a negative. Be careful about the words, and this is important. That's all. Thank you.